Today on the CEO Barbecue, we're looking for gold in Canada's Michipicoten Greenstone Belt, together with red pine exploration. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Red Pine's focus is indeed on Ontario's Michipicoten Greenstone Belt, and that's located about 2 kilometers southeast of the town of Wawa. There is a historically producing brownfield camp on this property where the combined historic production was reported at roughly 120,000 ounces of gold. The more current numbers are from 2024, where an NI 43-101 resource showed close to 850,000 ounces of gold at a grade of about 1.8 grams, as well as another almost 850,000 ounces at 1.6 grams per ton in the inferred category. That's as both open pit and an underground material along the Jubilee Minto shear system. The immediate plans for Red Pine are to update the resource and deliver a PEA in the first part of 2026. Presumably in Q2 of 2026, targeting an initial toll milling small pit starter operation that could later scale into a larger open pit plus underground operation, while ongoing also drilling tests, step outs, and regional targets and whatnot. And we'll talk about all that, of course, and how much will all that cost? Where will the money come from? When will the drilling be completed? And what are the main expected challenges? Are all part of the questions that I'll be asking later on. Red Pine is listed as RPX on the TSXV, where the average 3-month volume is about 700,000 shares. The stock's 52-week high is 21, and its 52-week low is 8 cents. With a market cap of just under 58 million Canadian dollars and just over 371 million shares outstanding, today this is a 15-cent stock with a 50 and a 200-day moving average at respectively 16 and 12 cents, which means the stock is now trading between the two. Moving on to the share structure, an important shareholder here to note is Alamos Gold, which owns slightly over 11% of the company, while management only holds about 2%. Again, there are about 371, it's actually 370.5 to be specific, million shares outstanding, and 51.2 million warrants with about 1 million options on top. In total, that means there are 422.7 million fully diluted shares, which could result in an increase of about 14% in shares outstanding if all dilutive securities get exercised, and that would then result in about a 12% ownership dilution if, that's always a big if, but if all those dilutive securities get exercised. As to the warrants, they expire in 4 batches, with the largest one being close to 40 million units that expire on July 9, 2028, and carrying a weighted average exercise price of 15 cents, while most of the others, 12 or so million, are already in the money at 9 and 10 cents. And again, big if, but if all those warrants were to be exercised, that could bring in about $12 million between now and the summer of 2028. Talking about dollars, I'll now go through their latest financial statement, which shows me the numbers as of October 31st, 2025, so relatively recent. At the time, the company had just in total had just about $7.5 million in current assets, 7 million of which was cash and cash equivalents. There was no long-term debt on the October balance sheet, but the accounts payable sat at about $1 million, a large part of which is due to the ongoing First Nations community consultation costs, which is, of course, something we'll talk about later on as well. Moving on to the P&L for the 3 months that ended on October 31st, I see a $2.3 million number under the total expenses, but that number includes some share-based compensation, as well as some amortization, which are, of course, non-cash expenses, and the real number is close to $2.2 million. Now, that total expense includes exploration expenditures, and they were recorded at about $1.8 million. That means that the total administrative expense was about $400,000 for the quarter, and that's an average of about 133,000 Canadian dollars a month, and that existed mostly of payroll and professional fees, as well as the overall G&A. That means that just under 20% of the money Red Pine spent during the last quarter went toward administrative expenses, and thus 80% or more went toward exploration. Worth pointing out, though, in that 80%, about one third of that, so $600,000, or an average of $200,000 a month over the last quarter, went toward compensation for the people related to exploration. But as always, I would like to remind you that exploration businesses can change relatively quickly, so these numbers may not be entirely representative of the future situation for Red Pine, and I might be seeing things wrong as well. So it's your responsibility to get the up-to-date numbers by the time you're watching this by visiting setterplus.ca. Now, for this to actually become a conversation and for me to start asking some of those questions, I will have to be shutting up already. And Michael, I'll give you the word here. But first of all, thank you for sitting down with me today.
Well, thank you very much. I look forward to our discussion.
I do as well, and the pleasure is all mine. But since this is your first time on a barbecue, I have to kick it off with the obligatory, how do you like your steak?
Medium rare.
That's you had to think for a second there. So I think it is a safe option though. So I'll take it and I'll leave it at that. But jokes aside, no, the pleasure is mine, and I am looking forward to going over the basics here. But really, we couldn't talk Red Pine without talking about what happened here in over the last decade, really, where the previous CEO was allegedly altering some of the assay results until late last spring or spring last year, until someone figured it out. So what exactly happened there, and who's responsible for that?
Well, essentially the previous CEO, and our evidence points to it was really a manipulation of assays. I think there was some procedural shortcomings with the company at the time, where the CEO could also be the qualified person for the project. I think that was, really not acceptable in today's terms. And what was really happening were the assay results were only coming to the CEO, and he was distributing to site. When I think in industry practice now is that assays are distributed to many people on the exploration team, and typically with the software that exploration teams use, they can download the data directly from the assay lab. So it bypasses any person getting it. And really what had happened was some assays were changed. Not all the assays. You can see in our previous disclosure, it was about 12% of the assays, and over a period of time. And I guess if there's a silver lining to it all, because how the assays were changed, it was easy to identify in the company's emails and in the changed assay sheets. So it was easy for us to fix the problem. It was easy for us to determine the impact of the problem. And that's why we quickly were able to issue public statements about the impact, and also to update the 43-101 resource estimate to show people the impact on the resource estimate. So if there's anything that was good about it, it was that. Also, most of the assays that were changed, this is an older property. A lot of the historic drilling defined the resource that we have. So some of the exploration drilling outside of the resource estimate and along the margins, that was more the target of some of the assay manipulation, as the old drilling couldn't be changed, so it wasn't subject to that same issue. So, it was really hurt the exploration, I would say, more than anything. So we were happy to do the investigation, to update the resource estimate. In fact, the resource estimate hadn't been updated in about 5 years. So we were actually able to use about 65,000 meters of drilling to update the resource estimate. And we actually added about 150% to the ounces in the resource. So in the end, we took a hit because of the assay manipulation, but in the end, we ended up with more ounces in the resource estimate. Also, as well, because of the fact that we were looking at it more as just an underground operation before. Now we were looking at it as an open pit. So the open pit, the new resource includes, some lower grade mineralization that would be included in open pit.
Yeah, we'll definitely talk about a lot of these aspects there that you're mentioning, Michael. But beyond the former CEO, who else has been held accountable? Are all the people that were involved no longer with the company? Was it only him? What did that look like?
It was mostly the CEO. We have strengthened a lot of things in the company. We've added 2 new directors, Alice Murphy, who came on last year. We brought in Gary O'Connor, very seasoned geologist, who has a really good background in QA/QC procedures. So that's helping. We've strengthened the board that way. We have reduced the number of contractors that we were using before. We brought in more people in-house to take care of some of the work that we're doing. So we're just doing a better job with tracking the costs, making sure that the money that we're raising and being used on exploration is going into the ground and not for administrative. For instance, when we started, we reduced the drilling costs from about $150 per meter to $100 per meter right off the bat. Some part of that was due to the fact that the industry was a little bit slower last year when we went out for tender. But we did go out for tender. We reduced camp costs. We put some of the contractors into their own expense to find accommodations in Wawa. We've, streamlined a lot of our office administrative functions, especially on IR, some legal, HR. So we've really done a good job at reducing the number of costs for the company. And that means that, really you can see what we're doing is drilling more holes with the same amount of money. So we're happy in all those improvements that we've made.
Mm-hmm. Have you found it challenging to talk about this in general when you talk to investors? Is there still kind of like a show me, don't tell me type of thing where you have to try and regain credibility for the company?
Yeah, I think, it's improved over the last year and a half. It's certainly improved. At the beginning, it was very challenging for the first 3 or 4 months until we were able to, show people how the resources increased and what our plan was for the project. I honestly think that assay manipulation, that was a problem with Red Pine. I had a lot of money drilling without a direction to drive it forward. And I think that lack of direction really has shown. And I think because of that, people have watched the share price continue to decline over a number of years. And I think this is really just the icing on the cake. So, I think there are people even today that will say, I invested in Red Pine in the past and I will never invest again. And I understand that. But certainly a lot of people that were previous shareholders or our current shareholders are certainly supportive and buying shares again. And we certainly brought in a number of new big firms who have bought the share and been quite supportive. So I'm happy with the turnaround. You always want these things to go faster, but it's taken the time and there's no shortcutting that. And, now we have a good plan going forward and a lot of people are buying into our new plan and direction and focus for the company.
That new plan and direction is definitely something I want to touch upon here. So I'm just making a note on my list. But since this is you're the new CEO and this is your first time on the barbecue, we're going to have to go through some of the obligatory smell tests first, which is not going to talk about how you like your meat anymore, but it's going to intend to understand more about what the incentives and the track record of management are. Starting off with yourself, indeed, and your track record. Who are you, and have you made more money for shareholders than what you've spent during your career so far?
Well, I'm a geologist by trade, and I've held a number of senior positions in companies over the years, mostly in the role of VPX. For instance, my previous 7 years, I was with Wesdome Gold Mines, and when we took over management of that company, the shares were trading just under $2. Today they're trading around $22, but when I left there, it was around 16 or 17. So One of the success of that company was through the drill bit. We acquired some properties that were really one mine, mom and pop operation, 40, 50,000 ounces a year. They were really starved on capital for a number of years and didn't do a lot of the drilling that needed to be done. So when we joined this company, we raised the money to do the drilling. We were very successful at Eagle River. Now it's producing over 100,000 ounces per year. We discovered the Keena Deep deposit, which is a high-grade part of that big gold system. And now it's a 100,000 ounce a year producer. So that company is a 200,000 ounce a year producer, making money and doing well. Before that, I was with IM Gold, looking at all of their exploration worldwide. Did that for a number of years. And previous to that, I was with St. Andrew Goldfields, again, for about 7 or 8 years. We had assets in Timmins. We had about five mines running at the time. We shut down every project. We went down to 12 people in the company. We concentrated on the main projects, did the drilling that had to be done, did the technical reports, and started the mills back up, and we were producing about 150,000 ounces a year, and we sold it to Kirkland Lake Gold for $550 million. So certainly another good, success story. And I don't want to say it was anything spectacular other than fundamentally, putting the money in, doing the drilling, find out what you really have, and bringing it into production. And I think that's the real sweet spot. It's certainly where I spent a lot of my career, not out in the green fields, finding whole belts and new deposits. It's really about existing or past producing mines where there's already infrastructure that can be utilized. It certainly makes, when you find a deposit, it makes it a lot easier to bring these projects back into production. And that's where I think a lot of value can be added to companies. That's certainly my experience. And that's how I see Red Pine. It's a project. It's been mined here off and on since the 1890s. It's right beside the town of Wawa. A lot of infrastructure in the area, 4 or 5 mills, some really good mining companies nearby. And it's really up to us now. Do the drilling, finding the resource, what's the best way forward, and driving it into production, and really showing what we're trying to do here is find ounces and get them into production.
Mm-hmm. Do you currently hold any other executive or board positions with other companies?
I am a board member with Legacy Gold, which is a gold project in Idaho.
Mm-hmm. That's it, though. No active day-to-day operations or anything else that you're running.
No.
Okay. I want to move on and talk about skin in the game as well. Management and insiders are noted at, as I mentioned, just about 2%, which isn't all that high, and understandably so, as you just came in. But are there any plans in place to increase insiders' alignment with shareholders here?
We certainly are trying to get more of the insiders to buy stock. I would say a lot of the previous management that was maybe ousted when it came, so those shareholdings are gone now. The new group, we've used a lot of consultants and contractors over the last year as, we have done the drilling and, trying to drive the PEA forward. So as we continue forward, we start bringing on more full-time people. We'd expect them to participate in some of the financing and also some sort of, ownership program. That's not really in place yet. I think getting the PEA done, knowing our path forward and being able to show that public, I think that will help a lot to, bringing that on. So we expect to see that increase over time. And I know from the last finding, which we did in July, we had 3 or 4 different people that did take part of that financing. And, it's a good trend. We'd like to see more of that. And we're going to continue to, promote that, in the company as we go forward. And certainly I'm going to, continue to contribute during, the financings that are coming forward as well.
What about open market buying? Is that something you have the ability and desire to do as well?
It's something that we've always been a little bit reluctant to do, just because we always seem to have drilling results that we're holding on to. We don't want to get caught into that time frame of sitting on, or buying on results that could be material, even if they're not. Maybe the perception's not that good. So we're very mindful of that. I think that, once the PA comes out, I think we'll be in a better position to be able to do that because that's really something that we've been sitting on for a number of months. And when that comes out, in the new year, then I think afterwards there'll be an opportunity for a bit more of that.
We will definitely talk about that as well. It is an interesting, obviously, a big part of the story. So I have a couple of questions about it. But it might be a good point to talk a little bit about some of the other shareholders without being Alamos here, because again, they own just a little over 11% of the company. So they're a reporting insider now, I guess. But what's their deal? What's their goal or idea here with Red Pine?
Yeah, well, certainly so their investment was made in 2019. And at that time, they bought about 19% of the company. And yeah, over the years, there's been somewhat diluted down to, as you say, around just over 10%. And they've certainly been strong supporters technically, which has been really good for this group because I think they've had some good inputs, certainly since I've been involved. Now that they've purchased which was Argonaut, the Magino mill. Now they have a large 10,000 ton per day mill there, but they also still are running their Island Gold mill, which is about 1,200 tons per day. So, they're big into the region. At some stage, they're going to really need feed for those plants, and located only 40 kilometers away if you take a back road, 70 kilometers if you take the highway. There's an opportunity to provide feed for those mills. But, I really like to think that a bigger company like Alamos is more interested in, the big sizzle, the big, exploration project. And that's what we really like as well. We do have a large resource of, 1.7 million ounces comes right to surface. We do see an option there to mine a small portion, start making some money, but it's really getting that money off a small production to pay for the exploration potential of the property, which I think is really the ultimate part of this property. And I think that's what really attracts someone like an Alamos, where they can see the ounces we have, but what's really there. And that's the exciting part. And that's what we want to use the money for, is to continue to drill off this large deposit.
Do you think having them in there as an insider limits your options, though, later down the road? Does it like lock you to Alamos as the only possible operational partner, obviously, but also maybe potential buyer down the road? Does it lock you to them?
That's a great question, because I think before, when they were closer to 20%, I think it did. And we did receive some of those comments from some of the bigger funds or bigger potential shareholders that would be, kind of locks us up as this is, an Alamos property in the end, and they can control us, and they can, impact our share price, negatively in the future for their benefit. And I certainly think that we've had discussion with people about that. I think since the gold price has gone up, I think that's less of a concern, because now they're only down to 10%. And I think there's a number of other, larger mining companies, larger exploration companies that are now interested in this area and looking at it as a toehold as well. So, and there are a number of producers in the area that have mills and mill capacity. So I think because of this price and how this property is starting to look, I think people are less concerned about that now. Particularly, I would say the strategic partners in the area. So I think that's good. I think there's a lot more excitement about the property and this region. I mean, you look at the money that Alamos has invested in the Island Gold operation and the Magino mine, and what Wesdome's invested there, and of course with the big sale of the Hemlo mine to the Hemlo Mining Company in the last month, and the value that they paid for that project and their plans to take it forward and develop that. You can really see that this is an exciting area. And I know from what they say about real estate, it's always nice to have the smallest house on the best street. So it's sort of, developing that way. And I just think a lot more people are now familiar with this part of the greenstone belts in Ontario. So it's starting to help us a lot as well.
Mm-hmm. Talking insiders, do you or any of the other insiders personally own a royalty on any of the projects you have?
No.
Okay.
No. Well, sorry.
No, I was going to
The,
ask
the
about, yeah,
royalty.
what is the royalty? Because it is kind of a camp, and there's historic production. There's been a lot of movement in the camp. So what is the royalty situation there over the the ground?
Yeah. So there's two royalties. One was to the original vendor, which is 1.5%, and you can purchase 1% of that 1.5% for 1.75 million. That royalty is probably worth, just back of the envelope, $20 million. So we would purchase that 1% on the first day of production and buy that back, leaving 0.5%. And in 2023, there was a 1.5% royalty sold to Franco-Nevada for around $7 million. So that means a total of 2% royalty on the property.
Mm-hmm. That's so good, and that's what I'm really checking for here is that royalty to any of the insiders, and that's fine that it's not. And I think this about does it for the smell test. I want to move on and talk specifically about that business strategy and what you are hoping Red Pine is going to become. What do you see here? Do you want to build a mine or do you want to sell one?
Well, we certainly want to at least start with building one. And there's a really low risk staged approach to do this. And again, this is where the infrastructure is so key. And this is why, we were able to start up Kena when I was at West Dome and with St. Andrews, those other mines, because infrastructure is everything. So we have roads on the property. We have old waste dumps that have been, reclaimed, but the base is still there. And mills in the area, a local town, power, all of that's very integral to the part of bringing this into production. I think there's really three main ingredients. You have to have infrastructure that you can use to process your ore. You have to have ability to quickly permit, and I'll say quickly permit, take advantage of this really high gold price. And you have to have a deposit that's amenable to that. And I think we have all of those things. Firstly, if we look at the deposit, it's a large resource that comes right to surface. There's been a minimal amount of underground mining to try to take out some high grade veins. We're really looking at mining a more moderate grade, 3 to 4 grams per ton, shear zone, 5 to 10 meters thick, hanging wall of footwall. And that's the kind of what I refer to as like a meat and potatoes type mine. Easy mining, moderate grades, not the real splashy stuff. That's in there. But the geometry of those splashy areas, and we know this from past mining, really hard to follow. So the low risk approach is to mine the entire zone from hanging wall to footwall. So that's the ore body. We load that into a truck. We haul it down the road. The second thing is the infrastructure. So we have, like I said, the 4 mills in the area. There's one at West Dome, there's Island Gold, there's Magino, and there's Hemlo. So there's also one at Vault as well. That's a slightly different mill. It's maybe not best suited for our ore, but there's still an opportunity there. And permitting. This is a site, as I mentioned, right beside Wawa. It's on patented land, so the old leasehold patents. Right now, we can build roads here. We particularly a closure plan. We actually have a closure plan that would need updating. And so we're looking to do that as well. So those are the three things that we have in place. And we were drilling initially when I started with the company to test some areas outside of the main deposit. But when the gold price started to increase, we thought, why are we paying this with shareholder money that we're raising on the market when we can just go into production, utilizing toll milling scenario, generate our own funds, and then we can pay for the drilling of the larger project, which is either a large open pit and an underground or going to a large underground. And this is all going to be price determinant, and it's going to be part of the trade-off studies that we're doing right now with our consultant, and trying to find out what the best way is. But for sure, the small pits at surface have been really robust. We want to be able to show people how robust they are and how we want to approach this deposit, and that's all going to be included when the details come out as part of the PEA.
Does doing it that way, and specifically the toll milling part, does that limit you or put a bit of a ceiling as to what the size of the potential production might be here? As in, what is the size that where it's no longer a viable option for you to do toll milling, or how much does that cap you at?
Yeah, it's certainly it's a good question, and I don't know that we've investigated enough to know what that cap is. We've looked at this project in a very modest way and said one highway truck of ore leaving site every hour. That's about 1,000 tons per day. And so we've been evaluating the project on that, believing that we could find a place to process 1,000 tons per day. Just for a comparison, the neighboring Borden Lake mine that ships ore from that site to Timmins, it's a 300-kilometer long trip, and they ship 3,000 tons per day. So 1,000 tons per day that we're planning, we could certainly do more than that. The milling capacity at some of the other operations is a lot more than that. It really comes down to now what we're doing as part of the PA is looking at these near surface pits and determining what that deposit will support. So we believe 1,000 tons a day is conservative. If we can operate a couple of small pits right at surface at the same time, we could generate more than that. But those are the studies we're doing right now, and everything that we've done leading up to this point internally that would justify, going into this PA has all been done at 1,000 tons per day. So I think we've been on the conservative side internally, but this is what we're looking at now as part of the PEA.
I don't think you're guiding anything officially or publicly about the PEA, but how big do you think that PEA could get in terms of total size?
Well, I'd like to think that there's always going to be, the really big sort of low-grade pit that, consumes all of the resource estimate. We've seen that last year when we did that, the resource estimate. We know a big pit can work there. We're not really looking at this as raising $1 billion and bringing a pit like that into production. I think there are more ounces to be found there that would maybe in the future justify going to a large pit like that. Whether it's something that we would do, at this stage, that's not really where we see the most value. We see the most value being small and removing the higher grade part of this deposit. So near surface pits and then going to an underground and using up, just for an instance, really about something less than the 1.7. Maybe it's, just say half of that size of that, but at a more moderate grade and using that and mining that in a series of small surface pits, and then going to an underground phase after that. And the beauty of this deposit, because you start with a toll milling scenario, at any point in time, you can say, okay, now I see that, it'd be better for us to switch. We have some money in the bank. We've used that money to drill off a nice underground mine. We want to develop our own mill because we feel that, the cost benefit analysis would be much better. I think when you then use the money that we've earned in those first few years of open pit production to help pay for developing the underground mine. And maybe that's the time we would build our own mill at a moderate tonnage rate, or a good time to maybe even bring in a partner that's in the region, and they could maybe pay for a new mill for us that would be better suited. So I think there's an opportunity there. You did ask about if we want to build it, we want to sell it. I think initially we build it, we de-risk it. We're going to be getting the permitting. We're going to be bringing this thing into production. We're going to start making money, and then at that stage, I think having other producers in the area, there may be some opportunities to partner with someone taking it forward, and eventually, be absorbed by somebody that can really do a better job, maybe with some of the bigger scale mining, maybe the underground mining or a large pit mining, than a small exploration company like Red Pine could do. Even though we'd be transitioning to producer, someone might be better suited to do that. So we're always thinking of the shareholders. If it's better for them, that's the route we would go down.
Drill it, permit it, build it. Sounds like a walk in the park. I'll call you in a year and we'll see about that. But no, jokes aside, maybe you can talk to me more about that balance and how you determine that, because you're stepping into a controversial story at that point when you're stepping in. The market's not giving it a valuation that you believe you deserve, yet you want to go for a PE. So why now? I understand the financial situation, but what about from the market's valuation perspective? Because if you think there's much more upside there, wouldn't putting out a PE put a ceiling on the story for you right now?
What we want to be able to include in that is a good part of the deposit. So the small pits and the underground. So I think, we try to get that value come out, and then we can take up just a portion of that into a pre-feasibility study, and that's our fast track to production. I think that as we go down this path, so next year the PA comes out, then we convert that PA to a PFS. By then, we've probably identified which mill we're going to be processing to. So there'll be proof of this is how and where this ore is going to go. And then we get the permit for it. And I think at each stage, we're going to be adding a lot of value into the company. And then I think once that's all done and we're ready to go into production, we'll have seen a lot of value increase in the company because of all these positive steps. And then I think that gives you an opportunity then to really be starting on the exploration side to show that and capitalize on that upside potential. And that's where we get the flexibility of when to do that. And that's really how I see that last bit of value coming in is really showing the upside here.
That's fair. And it's good that you're thinking about these things, obviously. What about that fast track portion that you talk about? I see that you often talk about infrastructure, but how much of that infrastructure is actually usable today? And I guess it might be worth sticking a number to it if you could, as in how much less CapEx would Wawa require if it were to be built with the current infrastructure that's in place?
Wow, it'd be a substantial amount. Even for, let's just say, 1,000-ton operation, we might be saving a couple of $100 million on a mill if we can toll mill. That would be a big one. The roads, having the Wawa there, existing milling power. Wow, there's tens of millions, if not hundreds of millions of dollars of capex that we would be saving initially. And the other thing is that when we start up, and this is where it gets sort of staged and low risk for us. When we start up for the mining, we envision starting with contract mining and contract hauling of the ore down to the whichever mill is being chosen, and then contract milling. Now, you pay for operating costs for that, but it keeps the capex to a minimum. So the capex would more be related to just the mining part of our operation, which would be, removing the trees, a couple of feet of overburden on the surface, and then starting the waste mining. So it'd be, and then some site infrastructures like a pond to hold water, maybe fix up the pads for waste rock deposition, those types of things. But it's certainly a really nice staged way, a low risk way to proceed. And even going into the future, as we're mining these small open pits, they're going to be going for a number of years generating money. When we decide to go into the next stage, which is, so now you start an underground phase to that, you have some money in the bank, and then at that stage you might say, okay, let's invest some of that money to put in your own mill, to bring in your own equipment, and even if there's with contract mining and milling, if you do have a production gap or you want to, stop while you wait for the development of the underground to be done, you don't have a large capex that you're trying to pay off. And because all contract mine, you can start and stop it as required. And I think, the way we see it is we say with our own people that'll be at site watching things, but really we say this is, the contractor's responsible to, mine this. They set up their facility and bring in the equipment they need, and they're paid on a per ton basis and or per ounce basis. And that's how, they'll decide how best to optimize the operation.
Mm-hmm. What is it exactly that has to happen then in that case? I mean, if you have all that infrastructure into place, and I joked about it just before that it's just drill it, permit it, build it. But what is that process like? What exactly do you have to do before you're actually in production?
Yeah, so the drilling has been done on the small pits, and we did a lot of that this year. Was part of a 25,000 meter program because we wanted to, before we started the PA, make sure that there was actually, a deposit right at surface, because you can imagine on a lot of projects, particularly old underground operations, nobody ever seems to drill close to surface. Right. So they're always drilling a little bit deeper. So we had to drill a lot of holes near surface, and we wanted to make sure the resource is there, but also we needed material to collect for metallurgy. We had to do the geotech for slope analysis, environmental, see if it's acid generating and whatnot. So we had to do a lot of that drilling, which we did. It provided us the confidence to say, this is the resource. And then we did our internal studies and we were quite happy with the results. So we said, okay, now let's enter the PEA. So we did that drilling, and right now we have enough data to complete the PEA. And the next stage would go PEA to PFS. So we're actually, as soon as we made the decision to go to a PEA, we started to drill again, particularly near surface, to collect additional data so that when the PA is finished, we can start on the PFS right away, and the drilling will already be ready. So we're kind of trying to advance it as quickly as we can. So when the PA comes out, we're not saying, okay, let's raise some money, do some more drilling for the PFS. We'll have the drilling done. And that's exactly what we're doing right now. We have a drilling program that started about 2 months ago. It'll finish at about the same time the PA is finished. So towards the end of the first quarter of next year.
Mm-hmm. How much of that work can you complete on the current treasury? How much money do you have, and how far does that get you?
So at the end of our last financial statement last month, we had around $6.5 to $7 million. So we have enough to complete all of the drilling that we have planned, and will get us through the other side of the PA. And we have enough funds with the corporation for most of next year, as well as for all the baseline studies that we're doing, because, as part of the permitting process, we had to collect a year's worth of baseline data. A lot of the information we already had, because we collect surface samples of water every quarter on site. So a lot of that we have a lot of historic information, a lot of studies we're just updating. So that was about a year's worth of baseline data. We started that last July. We'll be finished next July, so in the middle of next year. And we have all the funds necessary to do that work. Right. The funds that we don't have, and this is what I really like, and I don't have a map to show you, but when we started the drilling in late 2024, we actually drilled a couple of holes on the down plunge extension area of the main deposit, and we actually found what we believe is interpreted to believe the faulted extension of the main zone. Very positive. We had some nice visible gold. We had some nice alteration. The grades were in around 5 grams per ton, a little bit narrow, but we believe we're just on the edge of the deposit there. It's the first time we've ever had drilling down in that area. And I think that's one of the best targets we have on the property. So as part of, as we continue down the road and we start to, have some money available, we definitely want to get in there and drill some holes, because I don't think you'd want to, give away this property or make a deal on the property until we had a chance to drill a couple of these really fabulous targets. And that's one of them. That's my favorite. So if we could have some additional funds available to us later next year, put a few holes into some of these really key targets, again, I think that could leapfrog us to show this really big upside potential on the property.
Do you think that's a risk, being taken out before you've actually seen what the property's got to offer?
It is, in the sense that we'll always have the production side as a backup, and I just think if you could show outside of this that it can be so much more, I think even if you don't hit. That might limit to your big picture, but your immediate term picture, I think, is still always going to be there. That we can produce here and make gold, and this is I guess when you're trying to run really who we are an exploration company. We are looking to make this the big project, and this fast track scenario to production really provides the funding to pay for that exploration. And that's what we really believe is that drilling will prove up the real big side of this property. That's really never been tested to any way below 300 meters. And we know that, the best part of Eagle River wasn't found to 25 years into the operation. And the better part of the Island Gold Mine wasn't found really until Alamos got there and drilled some deep holes. So, that's what the potential here is on this property. It's in the same rocks, it's in the same belt. And that's what we want to have, is the opportunity to drill some of those holes that we just are really expensive and hard to finance, hard to fund, just off the market. So this is our way to get the money we need.
Why is that the case, by the way? Why is this an underexplored package? I mean, especially given the history here, why hasn't someone brought this into production already?
I think there's a couple reasons. The property, because there was, in the old days, and this goes back to the 1890s, but really it was mined a lot in the 30s and the 60s, there was probably about 10 to 15 different head frames. So 10 to 15 different owners on the property. So very fragmented. I think that was a big part of the problem. Also, I think even when the property was acquired, Red Pine at that time only owned about 40%. The other 60% was tied up in an estate, and it was hard to deal with that estate. And now we finally have acquired 100% of the property, and just acquired our last patented claim in I think it was July of last year. So, it's been a lot of tying this property together, and I think if there's anything that Red Pine really did that was spectacular, that was it. Was the sire, bringing together the entire package. So and ownership to 100%. So I think that's really impeded it in the past from being a producer compared to some of the other surrounding properties.
Mm-hmm. Does being a historic mine site also mean easier permitting for you, or would you have to do everything all over again?
No, a lot of things. So we still have a closure plan, which is really big. We actually just had it transferred into our name. So I think that was really, really important. There's a couple of permits that we still have. So again, I think that helps us a lot with the permitting. The fact that we have the leasehold patents, that we don't need a permit for a lot of aspects of what we're doing. I think that's positive. A lot of support from the local community. Wawa was a town of 6,000 people when the iron ore mine was running. It shut down in the 90s. Now the population is somewhere closer to around 3,500 people. So there certainly have been supportive of development in the area. And I think one of the biggest things for fast tracking to production is that we're not building a mill or a tailings area. So it's really just a mining operation, and all the rocks being taken off site other than the waste rock, which we have waste dumps to put it on. So I think those all contribute to why we believe the permitting is going to be relatively quick compared to a greenfields property.
Tell me more about the locals. Besides the local community there specifically, what's the First Nation situation?
Yeah, so we have, there's a number of First Nations groups in the area. We currently, for the exploration, we have exploration agreements signed with 3 First Nations groups. We believe we'd have to convert those agreements to IBAs as we go forward and get closer to production. We certainly have a good relationship with the First Nations group. In fact, we have a number from the First Nations group is Mr. Cotton. They're located just outside of the town of Wawa, and we have approximately about 4 people and a number of contractors that work with us currently on the project doing the exploration. So we're part of the community. We've certainly been growing with the community over time. And certainly since I started, that's something that we really wanted to open, being more involved with the community, tell people who we are. We're not trying to hide behind, we're just part of the community, and we want to, grow together. So I think that's resonated well. We look forward to working with the First Nations groups as we go forward, and business opportunities for the development of the property. So that's certainly something that we're going to be going to be more involved with in those discussions next year as we go through the permitting process.
Yeah. Well, I'm really wondering about that, or really asking about permitting and community and whatnot, because although Harte permitted the Sugar Zone, I believe, and Wisdom permitted Eagle River, they both faced delays related to their water licenses and overall stricter expectations from the locals and government as well. So, what do you think will be the biggest challenge in the permitting process for yourself?
Certainly, water is important. We do have bodies of water, of course, on the property. Some of these bodies of waters, they're not related to a waterway, so they're really just standing lakes or surface water, and there are areas because of the past mining that have been emptied before. So I think that will help because they're not a natural waterway, so that should help with that. I think the disturbance is a lot less, and we have a big property with a lot of high land for putting waste rock and other things. So I think that just naturally helps physically, on the taking the project forward.
Do you think water is in general going to be the biggest challenge for that business strategy that you have here, or are you seeing something else, kind of from the perspective of geology or geotechnically, or something else that kind of keeps you up at night, if you will?
Yeah. And the beauty with the water, as well as, and I forgot to mention this, was that we do have, an old tailings area on the property, which we're not touching, and it's already been reclaimed. And we do have a polishing pond. So we do have a way already to control the water across the site with a number of sampling points. And as I mentioned, we sample that water every quarter, and it's been good quality. So I think the risk of that is minimal. One of the bigger issues I think that we're dealing with now, and why we're collecting so many samples, is metallurgy. Because if we don't have our own mill, having your own mill is great because you can adjust it and set it up exactly how you want it for your ore type. When you're toll milling, you have less flexibility. Maybe it has to be blended with the ore that's currently going through that mill. Maybe they batch process it, but maybe the mill's not set up, the best way for your ore. So maybe your recovery might be, a couple points off. So I think those are areas that I won't say that they're a concern, but we just need to collect the data. And all of this drilling that we're doing right now, and going back to the old core, we're collecting a lot of samples for metallurgical analysis and what's the best way to do it, especially at a toll mill. There may be some areas where, look, we want to hold back some lower grade and just send the high grade to make as much revenue as we can for the ore. Or there's areas that have more sulfide or less sulfide and more other minerals that, we can have the opportunity to hold back, especially in a very selective small mining scenario in open pits. And that, we know we can optimize. We could bring in an ore sorter to help with these as well, because that really reduces your toll milling costs and your shipment costs, right? So these samples that we're collecting now are really important to help us optimize for the future. And again, maybe it's not something we do now as a PA because we're still collecting the data, but certainly by the time you get to the PFS level and you get into production, you want to make sure you're optimizing as much as you can. So we're collecting all of the data. And, it was always our intention as we go through the exercise of a PEA and going forward is to always do good quality work. So that's why we brought on a number of good firms that are, helping us with what data and what work should be done. And I think in the end that'll pay back in spades because of the optimization that we'll be able to do later.
Does that include doing metallurgy work, or what's the metallurgical situation for you right now?
Yeah, it's definitely metallurgy. So we're doing a lot of bottle roll tests everywhere. We're also doing a number of metallurgical tests, looking at gravity, flotation versus cyanidation. We're doing all of that with SGS in Lakefield, and a lot of mineralogy. So we have a PhD geologist there who understands the geology very well. We've been doing a number of SEM sections, laser ablation, understanding the mineralogy. So we've done a really good job, and now it's trying to bring it all together make sure we understand it and spatially where all of these samples are occurring and what's the optimal way and schedule to mine out these different ore types, because there are several different ore types because there's different phases of mineralization.
Talk to me more about that. What does the mineralogy look like? And you say that there's different ore types. What is the gold hosted in?
Yeah, so there's I guess there was three main types of phases of mineralization, but I kind of group them in two. Maybe I oversimplify compared to our geos at site, but there's a big shear zone, and I said it's about 5 or 10 meters thick, and within that shearing, silicification, sulfide mineralization. There's some pyrite, there's some phenopyrite, there's pyrrhotite, there's some chalcopyrite, and within that, more disseminated gold mineralization within this background shear zone. And the average grade of that might be more in the order of 3 or 4 grams. But within these shear zones are sort of meter wide quartz veins, very splashy gold, nice visible gold you like to see, very exciting. You drill into it, you get 100 grams per ton, and very nice. But the geometry of those very high grade areas, and that's what they tried to mine in the past, the geometry is very irregular because they formed and then the shear zone kept shearing and it tore these veins apart. So the geometry is really irregular, hard to mine underground, and that's why the underground mines in the past, I think, failed. Particularly, their cutoff grades were much higher. I mean, they were mining a lot of that, when gold was a lot less money, so their cutoff grade might have been 5 or 6 grams. So they couldn't really mine out the big shear zone. Where we're looking at it now with an underground cutoff grade of somewhere in the order of 2 or 2.5 grams, can mine 4 or 5 gram material in this big shear zone, which is a much bigger volume, much lower mining costs than previous. And that's the difference in how it was mined in the past and how we're looking at it. So if there was a way we could separate just on quartz veining, which ore sorters can easily do, you can make a really high grade product that you could send to a farther mill, because maybe the traveling distance is lower, make a lower grade material that you could send to a different mill or the same mill, or, then if the really low grade material, and that would maybe end up on a stockpile until you had your own mill built, or later, at the end of the pit life. So you're mining high grade first to get all the cash you can up front, then you mine that later, when the capital's paid off and whatnot. And I think those are the options, and those are really what you do in the optimization when you're mining. And the way the gold price is, if you were mining and the gold price for that day was what it is today, $4,300 US, you might say, well, I've got a bunch of low grade here, but let's just send it to the mill anyway if there's capacity, because there's still a lot of margin even on lower grade material.
Mm-hmm. Is continuity a problem, though, for you, both metallurgically, but also in terms of grade?
If you're mining the entire shear zone, the continuity is really good. It extends about 2.5 kilometers along surface, and it's very continuous. Within that, some of the zonation for some of the other minerals, it varies a little bit, but it's pretty good. And that's where we're doing all this infill drilling, is to make sure we can track and monitor, how to best or how to optimally mine this deposit out. And if there's a blend required of that, how do we do that ourselves? Maybe we stockpile some and we blend it before it gets into the truck. So those are all the things we're looking at. Mm-hmm. We're also looking at, if, we're using the toll mill, how do they want the feed? Do they want it run of ore, run of pit? So it's, -6 inches. Do they want it -2 inches, -1 inch? So these are the things we're also working in. Do we do that at site? Obviously there's a, cost to us if we need to do that, but maybe it reduces the fee at the other end. So those are all the sorts of things we're looking at. And if you do crush it at site and you get the product down to, an inch in size, maybe you can, have the opportunity to do some ore sorting. So we're just looking at that as well. So we're collecting samples for that.
How tight of a spacing or drill spacing do you need in order to deal with that?
We're probably in around 20-25 meters, I would say.
Right.
Yeah, and that seems to be fine for us. Yeah.
Yeah. Do you think financing might be a challenge, Michael, or how do you see it between now and you getting into production? Do you think it's reasonable to expect for you to find enough money at a reasonable valuation so that you don't have too much dilution in the process?
Yeah. Yeah, I think that's a good point. Because we're fully funded to the other side of the PA, I'd like to think that when the PA comes out, or if we have, an opportunity, what we can sign an MOU with one of the mills that could process the feed. At that stage, I'd like to think that that's going to add some value into the company. And at that stage, it might be less dilutive to do some additional financing. So we're looking at that as well. The good thing is we have an option if we want to keep drilling. We might not necessarily have to because, we'll have all the data we need to go to the PFS. So we're really just paying for the study, which is certainly doable with the funds that we have. If there's an opportunity to raise some money to keep the drills going and start looking at the underground, which would need more drilling, or to do some of the step out exploration drilling that I was talking about on some of these really fabulous targets, then we would do that as well. But we're going to have the option to really look at that and take advantage of possibly a higher share price at the time.
Right. Okay. How do you think you're going to finance it at the time? Would it be just straight equity, or would you? I mean, you mentioned a partner. Would you consider a JV?
If maybe not a tree for property, but certainly a strategic investment, we would consider that. I think probably the next one is an equity financing, and to get us maybe from the PA to the other side of the PFS and the permitting, and then at that point we would maybe do some sort of project financing or debt financing.
So that you would expect to happen in like H1 next year or early H2?
That's right, probably H1.
Okay.
Yeah.
Right.
After the PA was to come out.
Why I'm asking this, or where I'm coming from with it, is because I'm thinking, how much focus is there on dilution? Because I mean, if you look at the number of shares outstanding, it doesn't seem like there was much focus on it before you came to the scene. So for you, how much focus is there on dilution?
It's a lot. I mean, a lot of why this change in focus, this pivot is really due to minimize dilution to the shareholders. So when we saw the opportunity to make our own money through small production and toll milling, that the main driver behind that was trying to minimize shareholder dilution.
Mm-hmm. Would you consider doing a rollback with the PEA? Because I know it really kind of only works when it's material. So would you consider a rollback?
We're not looking at that right now.
Okay. Yeah. That's a short answer. It seems like you want to say more. Would you?
No, that's it. We honestly haven't thought too much about it. It hasn't been. We think we're okay with the share count, and we think if there's one more small equity that have to be done next year, after that it's project financing. So I think we'd still be, okay with the the share level that we're at. If in the future, like maybe when we're going into production or something, that maybe there's an opportunity when we know the values really starting to increase for generating revenue, maybe there's an opportunity to reconsider. But right now we haven't put a lot of thought into it. I guess that's why my answer was short, because we really haven't had those discussions internally.
Would you consider taking on a new project, or is the focus like on this project, get it into production, and then see what the future brings after that?
Yeah, right now we're really just focused on this property. But if we can get this to a stage where it's ready to go into production, then we would consider some other opportunities, especially anything that's local.
Mm-hmm.
Something with a property or with infrastructure that we could use, particularly with a mill that, we could make it our own and get out of the toll milling scenario without building our own mill, but maybe buying a mill and fixing it up. So there may be some opportunities there. And I think that might be a good purchase for us in the future.
Yeah. How do you prioritize between all that? Or better said, how did you make the decision what to prioritize right now, or what you've told me so far, sort of between growing the resource envelope, converting inferred to indicated, and other non-flashy but still important things like your geotechnical or hydro and your met that we talked about? How do you choose what to spend on?
Yeah, that's a very good question. And right now it's been completion of the PA. So whatever studies are the most important to get that done, that's really what we've done. So like the drilling that needed to be done for the resource estimate, that was priority one. Drilling now for the PFS work is a lower priority. But we're doing it now. So we did have to prioritize all the various tasks. Metallurgy, starting to talk to other mills. Again, those are all big priorities. So we have a number of different studies on the go at the same time. And because of that, we've had to bring in a little help, but on a sort of contract scenario to help with trying to get some of these things all done at the same time, because we're a small company and didn't have a lot of the expertise. So I think we're utilizing some additional people to help us out as best we can without, blowing the budget.
Mm-hmm. Yeah. And how long do you think that's going to stay for up until you're in production? And is that going to change after that? Or how do you see that developing?
I think until production. I think when the PEA's done, that'll focus us even more on just the small pits and doing the detailed work to get it to a PFS and the permitting, and then the IBA. So we also have in our budget, bringing on some additional assistance for, First Nations consultation, engineering work. So we've sort of mapped out what priorities need to be done, and we have a budget to sort of include all that.
Yeah. Do you think you might have to hire more staff or someone on more on the technical side to help you get there?
Yeah, we will. Definitely engineering. We'll have to bring someone on next year for that. Maybe slowly at first and then more full-time overall. Environmental, permitting. Right now we have some good consultants helping us. At some point we probably want to bring on our own person. And as I mentioned, we are looking currently for a First Nations community liaison person.
Does that mean your G&A is going to go up? Well, sure it does, but how much is it going to go up by?
It's probably maybe 30%.
Okay.
I would say once it's all in place. I mean, maybe not off our total spend. Right now, we're using a lot of consultants. So, when you bring on your own person, yeah, you pay a bit more, but at the same time, you're doing more. So I'll just say that is maybe a rough number.
Yeah. And that's also, reasonable relative to what we talked about at the beginning. 133,000 is what I calculated. So 130, call it to 150. 30% would add 45 more. So you'd still be at about 200 grand Canadian, kind of max when you have that staff that you need. Does that sound reasonable? 200,000 a month?
Yeah, I think there's some opportunities to optimize that as we go forward. I think there's still some that could be done. We've been looking at sort of because we're small at this stage, joining a couple of having one person doing two jobs and whatnot. So that optimization is going to continue. And like I said, I think that we'll be able to continue to improve on costs, because that's important as well. I'd like to think that this company's done a pretty good job over last year, really reducing the costs.
If people are going to be doing multiple jobs, what is your second job going to be?
Maybe more marketing, I guess you could say.
Yeah, that could be part of it. And something that I also wanted to talk about actually is thinking about marketing. Do you have to do more marketing? Do you think maybe the lack of marketing is part of the reason why you're trading where you are? And how do you see that?
Yeah, I think we do have to. I think when I joined, we had that kind of the mess to clean up. Then we did a lot of technical work. We started to go to a few conferences. I think the story, a lot of people said, great story, never heard of it before. So that means that we're not doing a good job on the marketing. I think now we probably have enough of our ducks in a row that we can go out there and tell a good story. And I really think when the PA comes out, we'll really be able to push the marketing a bit more. Like I said, I think at conferences or when you've had discussions of people around finances, that's gone really well. I think it's when you get away a month after the conference is over and a couple of months before the next conference, we seem to hit these doldrums. So what we need to do into the meantime there, we fixed up our website. We're trying to have a fresher look there. We put on an AI on that. We're looking at maybe some newsletter writer, just more things to do. We're trying to be, careful with the money. But we're also realize that we have to do a better job in the marketing that we have. And I think we have a good story and we need to get it out there. And I think the next big push for that will be when the PA comes out there. So we're trying to lay out a good plan for that.
Yeah. Do you have an idea as to how much money you want to spend on doing that? Or is that part of that, $200,000 of potential G&A that you want to spend?
It's part of, it's part of that. We do have an IR person. We do have a few, consultants we're using to help with the website and things like that. The next push would be whether or not, it's a newsletter writer or some other thing that would help. So, wouldn't want to add in maybe more than 5 or 10,000, a month for something like that. But that's, have to see how we can optimize that best.
Yeah. Yeah, that's all fair. This has been a good introduction, Michael. I know you don't have all day for me here. What am I forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think that was really good. That was thorough. Like I said, I think the main focus is now that we fast active production, that is just the initial part of the story. The big part is, using that money to really drill off what we think could be, something a lot more than currently is as defined. So I think that's the upside. And, I'd say 6 months ago when I started to go out and do some of that limited marking, we didn't have any value for upside. We didn't have any value for the infrastructure or location of the property. So I think we're starting to get that now for the infrastructure. People are seeing we're going to be able to take advantage of it. I just don't think they see the upside of the property. So we need to continue to develop that part of the story.
Mm-hmm. Well, here's another interesting one for you. What is the most fair criticism that you've received of Red Pine since you joined as CEO?
I think, some people see the property maybe as a splashy high grade. To us, the way that we see this going forward, that part hasn't been found yet. I think this is a meat and potatoes mine that can make really good money. And that money to be used to find that big splashy high grade zone.
Right. That's nice and clear. It seems like you do know what you have on your hands and what people like and what people don't like. What about of me? What's your biggest criticism of me? Is there something else that you wish I would have done in this conversation, or what would you have done differently?
No, I think that's very good. I think you brought out a lot of, what we're thinking about as a plan and steps forward, and where we see the challenges. And I think that's important because a lot of means that I do have people never ask where the challenges are. And there's always challenges for every property. You just got to, continue to work through them. And, I think that this project's good. And I knew the project before I joined because I tried to buy it when I worked at Wesdome Gold Mines as feed for Eagle River Mill. So I knew the project already. So when I stepped in, I knew that, it was the project that was good and it just needed someone to, drive it forward and have some energy and direction that this company really didn't have before. So if there's one thing that I can really add to this project is providing that energy and that direction. And that's why we've done this pivot to show the shareholders that this really does have a lot of value. We just don't have it in the company yet, but that's what we're working towards, is to get the shareholders the value of the property.
Yeah. Awesome. Well, I really appreciate your time, and I hope we're going to have some catching up to do when you have your PEA, and we can go in depth on some of that. Maybe talk a little bit more geology at that point as well. But I really do appreciate your time. Thank you so much for doing this.
All right. Okay. Well, thank you very much. Nice speaking with you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."